Hello students, welcome to my YouTube channel Sun Academy. Today in this lecture we are going to solve a sum of investment account and financial accounts of FY BCom. As you can see, the question given is Sun Limited held 12% debentures of Moon Limited as on 1/4/19, face value 1 lakh and cost price 1,10,000. While transactions given are on 1/6/19, debentures of 2 lakh purchased at 99% ex interest, while that debenture of 50,000 sold come interest at 105% on 1/9/19, while debentures of 1,50,000 purchased come interest at 102% on 1/12/19. On 1st Feb 20, debentures of 80,000 sold ex interest at 95%. Brokerage is to be paid 1% on face value, while interest dates are 30th June and 31st December. That means when interest is to be received, stock is to be maintained as per FIFO method, and we have to prepare investment account. Now first of all we have to write opening stock, and opening stock is 1 lakh, cost price 1 lakh 10,000 on 1/4/19 to balance BD, that is opening stock. Face value is 1 lakh, while cost price is 1 lakh 10,000. Okay. Now second thing we have to do is have to write to due interest. Due interest will be calculated due interest will be calculated on 1 lakh at 12% for 3 months. Because interest dates are 30th June and 31st December, we are maintaining account from 1/4. It means interest of January, February, March is due. So interest for 3 months will be 3,000, which will be written on debit side. Then after on 1st June, debentures of 2 lakh are purchased ex interest at 99% on 1/6/19 ex interest purchased. Now as we know face value is 2 lakh, so 1/6/19 to bank account, that is purchase ex interest. Face value is 2 lakh. Now cost price 2 lakh into 99%, so that will be 1,98,000 1,98,000. Interest on 2 lakh 12% for 5 months, January, February, March, April, May. So 0 0 cut, 12 12 cut, 2 5 ja 10,000. Brokerage is set 1% on face value. Face value is 2 lakh. So that will be 2000. Now I have to add both these value, which will give me the cost price. That also comes to 2 lakh, and interest came as 10,000. Then after on 1 9 come interest, sale comes, but before that date will come 30th June when interest is received. So 30th June 19, interest received must be calculated on 3 lakh, 1 lakh and 2 lakh, 3 lakh, 12% for 6 months. 0 0 cut, 12 12 cut, 6 3 ja 18,000, which will be written on credit side. This is to be written on credit and this was to be written on debit. So on 30th June 19, by bank account, interest receipt will be 18,000. Then after we will come on the date of 1 9 19, sale come interest. Sale will be written on credit side 1 9 19 by bank account, sale come interest. Face value is 50,000. Then cost price 50,000 into 105 percentage. So that will be 52,500. Interest of the security will be 50,000 into 12%. 19, that means on 30th June last interest was received, so July and August for 2 months interest will be calculated. 0 0 cut, 12 12 cut, 5 2 ja 1000. Brokerage on 50,000 1% will be 500. Now sale is come interest, so interest will be subtracted while there is a sale, so brokerage also will be subtracted, so the cost value of this will be 51,000. Interest came to 1,000. Then on 112 security or debentures of 1,50,000 are being purchased. So on 1/12/19 to bank account, purchase is come interest. Face value is or nominal value is 1,50,000. We will have to calculate cost value, purchase, come interest. Sale is to be written on credit side and this to be debit side. Now cost price of 1,50,000 at 102 percentage will be 1,53,000. interest on 1,50,000 12 percentage for 5 months, June, July, August, September. Sorry, July, August, September, October, and November. 12, 12 got 0, 0, got that will be 70, 500. Brokerage on 150, 1% will be 1500. Purchase price will come after adding the brokerage and subtracting the interest because it is come interest purchase. So 7500 minus and 1500 plus, so 6000 is to be subtracted. Cost value come to 1,47,000. Interest came to 7,500. Last is on 1 to sale X interest at 95,000. 1 2, but before that 31st December comes, so interest received will be calculated on how much amount. 1 and 2 3 4 4 50, out of which securities of 50,000 are being sold. So on 4 lakh 12%, 6 month, that will be 24,000. So on 31st December 19, by bank account interest received 24,000. On 1 to 20 sale X interest, that will be written on credit side. This also was written on credit side. So 1 to 20 by bank sale X interest 80,000. Now cost price of this will be 80,000 into 95 percentage, 76,000. Interest 80,000, 12%. How many month? Only of 1 month. So 800. Brokerage on 80,000, it will be 1%, 800. There is a sale, so brokerage will be subtracted and interest will be written as it is. Now interest 800 and this will be 75,200. Then after 31st March 20, due interest is to be calculated on how much amount. 450 minus 50, 4 lakh minus 83 lakh, 20,000. 12 percentage for 3 months, that is 9600. 31st March 20 by due interest This is 9600. Now we have to find the closing stock, and that also is to be calculated as per FIFO method. How will it be calculated? From 1,50,000 is to be subtracted, then still you have a balance of 50. Now you have to sell 80. So out of the balance of this 50,000, that 50,000 will be sold, the remaining 30,000 will be sold from the balance of 2 lakh. So out of 2 lakh, if you are selling 30,000, you will have a balance of face value 1 lakh 70,000, and securities of 1 lakh 50,000 will remain as it is in balance. Now stock of purchase of 2 lakh had a cost of 2 lakh, so 170 will have a cost of 170, while cost of 150 is 1 lakh 47,000. So value of closing stock will be 3 lakh 17,000. Balance CD, face value is 3 lakh 20 and the cost price is 3 lakh 17,000. Now we will find profit or loss. So out of 51,000 plus 75,200 plus 3 lakh 17,000 minus 110, 2 lakh 1 lakh 47,000. There is a loss of 13,800 by profit and loss account. Then after amount of interest 18,000 plus 1,000 plus 24,800 9,600, that is 53,400. Out of which amount of 3,000, 10,000 and 7,500 will be subtracted. So on 31st March 19 to profit and loss account, balance of 32,900 will be transferred as interest received. Now the total of face value is 4 lakh 50,000 and total of cost price as value of 4 lakh 57,000. 51,000 plus 75,200 plus 3 lakh 17,000 plus 13,800. Now we will repeat it again. First of all, opening balance of the debentures is face value 1 lakh and cost price 110, that is to be written on the debit side. Now dates of interest are 30th June and 31st December. So we have to calculate due interest for 3 months. On 1 lakh 3 month 12% came to 3,000, which will be written on the debit side due interest. Then after there is a purchase of X interest, cost price is 2 lakh. So 99% of 2 lakh will be 1 lakh 98,000 Interest on 2 lakh for 5 months, January, February, March, April and May. 2 lakh 5 month 12%, that came to 10,000. Brokerage, in purchase brokerage is to be added 1% of 2 lakh 2,000, so 198 plus 2 lakh, 2 lakh face value 2 lakh, cost price interest 10,000. Then after on 1/9 a security are sold, but before that 31st or 30th June comes, so we have to write interest received on 3 lakh 6 month 12% 18,000, which is to be written on credit side of the investment account by bank, interest received. Then after we will come on 1/9/19, there is a sale of come interest. Cost price is to be calculated as 105% of 50,000, 52,500. Interest for 2 months, July and August, 12% came to 1,000, and brokerage 1% of 50,500. Brokerage and interest both are to be subtracted as sale is come interest, and when you are selling the securities, brokerage is subtracted. So 51,000, 50,000, 51,000 cost price and interest 1,000. Then after on 1st December, purchase has been made on 1st December, face value 150, cost price 102%, 1,53,000. Interest on 150 for 5 months, 12%, 7,500. Brokerage 1% of 1,50,000, 1,500. Now when you are purchasing, brokerage will be added, and there is a come interest purchase, so interest will be subtracted. So cost price came to 1,47,000, interest 7,500, and face value 1,50,000. Then after interest is to be calculated, interest received 1 lakh, 2 lakh, 4 lakh 50, out of which securities of 50,000 has been sold. So on 4 lakh 12% 6 month interest received will be 24,000, and is to be written on the credit side of the investment account. Then on 1/2x interest sale has been done, cost price 80,000 for face value, and cost price 95% came to 76,000. Interest on 80,000 for 1 month, and 12% came to 800. Brokerage 1% of 80,000 came to 800. Now there is a sale, so brokerage will be subtracted, and cost price will come to 75,200, interest 800, and face value or nominal value, that is 80,000. All transaction has been done, but as dates of interest are June and 31st December and 30th June, due interest will be calculated on 320. How? 450 minus 50, 4 minus 80 on 320, 3 month 12%, 9,600 on credit side of the investment account. Then after closing value, which is to be calculated as per FIFO method. How will it be calculated? Out of 1 lakh, first you are selling 50,000, so 50,000 is still balance of this security, which will be adjusted against this. Now you have to sell security of 80,000, but out of the remaining balance of this 50,000 you will adjust that, and 30,000 will be sold from these debentures. So out of 2 lakh, if you are selling debentures of 30,000, balance will have 170, and this balance will remain as it is 150. If a stock of 2 lakh or investment of 2 lakh has a cost of 2 lakhs, and then 170 have a value of 170, and cost price of this 150,000 debenture is 1,47,000. So total cost price of 3,17,000 will be written on the credit side, and face value 320. Now first you have to do the total of credit side and subtract these entries, then you will come to know that there is a loss of 13,800. And then after you have to total credit side of the interest and subtract these entry, so 32,900 will be transferred to profit and loss account. Now if you want to continue this chapter, then do follow for the next lecture. If you haven't subscribed, subscribe, share the link of our channel so that other student can also get benefit. And if you want to comment, if you don't, still you comment.